But what I want to start with actually is to let people know you actually have a new book coming out very soon.
I do.
IUL Exposed.
Sir. Yep.
Tell us a little bit about that.
Yeah, I mean,
because I've read it and it's freaking awesome. I cannot wait for people to get their hands on it. But tell us a little bit about it.
I wrote the book because I want to disrupt the industry, because there's the book is titled IUL Exposed, and then the subtitle is The Truth About the Most Misrepresented Product in Financial History. And so notice I didn't say the worst product. Notice I didn't say anything, whatever. It's just misrepresented. And so the entire purpose of the book is to talk about and discuss and show, enlighten people to here's why it's misrepresented. Here's where the mischaracterizations and representations of the product are. And here's how it actually can work. Here's where it does fit into a financial strategy. And ultimately, I just believe nobody should put their money into anything they don't understand, right? And so if you're going to utilize it, understand where the risks are, understand how it actually works, understand, just all the moving parts. Because the biggest problem with IUL is it's a very complicated product sold as a very simplistic solution that can solve a lot of different financial challenges. And it's simply just not true.
Right.
That said, there are certain use cases where an IUL can make sense, and I think a lot of people have kind of pigeonholed me as the guy that hates IUL and thinks they're evil and whatever. And I don't think the IUL products are evil. I think, I don't believe it's just a product. Right now, I could make an argument that a lot of the companies perpetuating the misinformation about the IUL products are evil and just capitalizing on opportunity to separate their clients from their money. And that's a whole different conversation. But ultimately, I think there's a lot to this. And, when people understand what the products are, how they work, where the risks are, I think what I find is they wind up in my side of the camp and my side of the street, basically saying, well, if that's actually how they work, I'm just going to go do a whole life insurance policy anyway. Now, there are certain things, and we can get into it if you want, where sometimes IUL will make more sense than whole life, depending on what you're after. But once again, it's just it's just a matter of trying to understand what problem you're trying to solve first, and then reverse engineering and finding an opportunity with the products that have the attributes that solve the problem that you're looking to solve, right? Rather than buying this product thinking it's going to do all these things for you.
Right. As you say, as opposed to this miracle unicorn financial product that's going to solve all these problems. It's really positioned as this one size fits all solution. It's so much better than the 401k. It's so much better than really any tax qualified plan. It's better than being in the market, and it's going to give you all this crazy retirement income. And it's just not true. It's all fantasy land, smoke and mirrors. Can it happen here and there? I guess, but we haven't seen it yet. And it's partly because it hasn't been around long enough to really prove that it can do that. Everything that's being used to sell it, it's all smoke and mirrors. It's all just what looks good on paper. So we're making a lot of assumptions around this product. And I've started to shift my focus around IUL quite a bit as well, like how I come at it, because initially I was pretty fired up about it. I was really pissed off because, like you said, you said it perfectly a minute ago, where you were saying, well, you learn how IUL works and what it realistically might be able to do, which is maybe 0.5%, maybe 100% as far as internal rate of return above a whole life. But then the question becomes, is the risk worth it for that extra little bit of reward? And for me, absolutely not. I want nothing to do with it. Right. Whole life was actually what I was looking for. Now, it might not always be the case, but you don't know that unless you understand how it works. And I've shifted my focus a lot to IUL from IUL sucks to it's the most misrepresented product in the world right now, right? Because like you said, can it work? I'm sure it can. I've been going back and forth with some people on LinkedIn with this. It's like, it's not that we're anti-IUL, we're anti-misrepresentation of the product. Of course. That's really
we're anti-hype. We're anti-hype. Like, the problem with IUL is that it's a bunch of half-truths being used to sell it, right? And so we're not anti the product, but I'm anti-misinformation. I'm anti-ignorance and naivety. I'm anti the fact that we've got all these agents that are out there selling something that they don't fully understand. And what drives me crazy is, and wait, listen, I've got my book coming out, right? And I can't wait to see what all the people in my chat thread, and I can think of a couple people in my comments on my YouTube channel that are always commenting like, you don't understand this, you don't understand that. And I'm like, wow, based on your comment, it's pretty obvious that you actually don't understand. And so I can't wait for people to actually read this book that have been kind of trolls and challenging me to actually see the impact that it makes. I think it's going to open a lot of eyes. And the problem is, this is a top-down problem. It comes from the insurance companies. It comes from the fact that these insurance companies are educating agents with half-truths. They're telling the happy-go-lucky upside potential of the story without talking about the reality of the downside risk. And they're positioning IUL as that it's got no downside risk because you can't lose to market risk and market loss. And so, like, the reality is nothing could be further from the truth. And, you know, if you just read the illustrations, that's it. If you just read the illustrations, go out, get an illustration, make sure it's run with the potential income that you want to be able to pull from it. So all the disclaimers and disclosures about the risks of that income being taken are disclosed in the illustration. Because if you don't have the income illustrated, a lot of those disclosures, disclaimers are not going to be included in the illustration. That's one of the little secrets about being able to check and evaluate these things. A lot of times what they'll do is they'll show you an illustration on a Zoom call. And I'm not saying every IUL agent does this, but this is a prevalent tactic where they will show you that, and then they'll run you an illustration. And on the Zoom call, they'll show you all the income, and then the illustration that they'll share with you won't show you the income. It'll only show you the quote unquote growth and the cash value with the current assumptions. And because they didn't show that, they didn't send and share with you the illustration with the income assumptions, it's omitting on the illustration. They don't have to share a lot of the disclosures about the risks of said income being taken out. So,
and even when they do show income, and this was a major red flag for me with IUL illustrations, is it shows the market going up every year, and it also has that 50 basis points of positive arbitrage when you're taking the loans out. And here's the thing, again, it's all about full disclosure. If somebody understands that, number one, the market's not going to go up every year. Okay, that's number one. We have to manage expectations. But let's say we insert a 0 year there.
Yeah.
The question now becomes, are you okay with the amount of interest that you're going to have to pay on that participating loan? Assuming that that's what's being illustrated, because that's what's primarily illustrated. Now, if they're taking wash loans, then that's a whole different conversation. That, to me, is a more realistic way of utilizing it for potentially retirement income, even though I'm still not a fan of that. But
realistic, but that still comes with its risks, right?
Sure,
like that's important to understand.
But what I'm getting at is, if people understand what the risks are with taking those loans, then, and you want to take the risk, fine. I don't care. Could it work better than a whole life policy and that, like, for retirement income? Potentially. Okay. But what we always come back to is people are not being disclosed those risks that you could potentially have. If you're taking those participating loans, you could potentially have a $50,000, $75,000, $100,000 hit just from the interest in a 0 year, because the income shown on these illustrations is so aggressive. It does not take long to build up a massive loan balance. And if you have a 0 year with a 4 or 5% loan interest rate, where do you think that's coming from? Now, if you're okay with that, fine. But people are not being told that kind of stuff. It's really frustrating.
Well, I think it's important to distinguish that in the fixed market, when I say fixed market, I mean whole life, index universal life, index annuities, any of the fixed products that life insurance agents are licensed to actually represent and sell, right? And educate their clients around. In that market, our job is to create a predictable result for our clients. That's really what it is. And to educate our clients simplistically on how these tools work. And when we look at that, I think it's just easy to say the reason I choose whole life over IUL is because I can create a predictable result. With IUL, there's nothing predictable about them. And that's the reality.
Right. And I was watching some IUL videos the other day, and the gentleman I was watching, very knowledgeable, but again, it was still like what he was talking about was still misleading, because he was talking about cap rates, but not mentioning that cap rates are often reduced. So all the assumptions are based on assuming that the cap rate is going to stay the same, which it rarely ever does. And as soon as it starts to drop, you might as well throw the original illustration out the window, because there's no way that when you have a 0 year, Tom Wall was talking about this. The cap could be the trap, 100%. Where now that it's like impossible for you to catch up because the cap rate has been lowered too much. Like it's just mathematically, you cannot catch up to the original illustration anymore.
100%. Right? And that is the problem, right? And so this goes into that's why I said you should never put your money into anything you don't understand. The reality is IUL is going to have to be very actively managed and very actively understood and funded properly, and maybe even the funding changed and overfunded down the road, right? To be able to reach a result even more than you expect to meet the gains. And then, of course, if we look at that, then the whole conversation about the internal rate of return and all that stuff goes out the window because you're having to put more money in to get this result. And so the internal rate of return on your actual cash in and the cash on cash return, we're looking at it being completely different.
What's up, my fellow wealth creator? Thank you so much for checking out this clip from the Millennial Wealth Creator podcast. If you'd like to watch the full podcast, there will be a link down below in the description. Make sure to also check out the additional tools, training, resources that I have in the description as well, just to help you along your journey. Thanks again for checking out the clip, and we'll see you in the next one.